Good morning, students. Welcome back. We are busy with the production and inventory cycle, and this is part 2 of lecture 1. Within the production and inventory cycle, there are certain documents and records that are commonly used. Uh, on the slide, you see the name of the document and also the details or what is entailed in each document. I'm not going to go through each and every one of them, but they are here for you to refer back to. Watch out for these documents when you look at a cycle description or a system description. Again here, more examples of commonly used documents and records within the production and inventory cycle. Have a read through all of them and then just be aware of them as we go through the cycle. We will now have a look at the production planning and design phase of the inventory cycle and have a closer look at what type of activities you can expect in this phase and also what type of controls we can expect. So this is the start of the whole production process, and it would typically commence with the issuance of an authorized and pre-numbered customer production order, a CPO, or an inventory production order, which is an IPO. Typically, these documents would be used to establish the trends for when finished goods need to be replenished. In other words, when does your stock reach its reorder levels, or when are you out of stock? Or the sales staff could also use these documents to anticipate, what would the future demand for a particular item be, and where are we in terms of the current existing finished goods inventory levels, and do you need to order more inventory, okay, to make up for the sales that they anticipate. To ensure the appropriate segregation of duties, these production orders, the CPO or the IPO, have to be formally authorized by the production planning department before they can be accepted by the production processing department or a factory manager, then who has to sign the document and have that as evidence that the CPO or the IPO have been formally authorized. So once the production manager or the factory manager has accepted the CPO or the IPO, a customer job card or a CJC or an inventory job card or an IJC is then generated by the production department, and it captures all the costs involved in the production of the items. Now, costs involved would be the cost of raw materials, labor hours or machine hours. Okay, so these job cards, they now capture these costs. Okay, as the goods move through the production process, each person responsible for a specific or a certain part of the production process has to sign on the job card as evidence that the goods produced have been transferred to the next stage. A daily production report of all jobs in process has to be produced, and copies of this daily production report has to be distributed to the production planning department and to the production or factory manager, and they use this daily report to monitor the progress of all the jobs that are currently in process, and also looking at those jobs that have been completed in that year or during that day, and that have been transferred to the finished goods department. Moving on to the production processing phase, the pre-numbered raw materials issues slip or an RMI slip is a request for the issue of raw materials that are required for a particular production run. Okay, so the RMI slip or the raw materials issues slip is prepared either by the production planning department or more likely the production department or the factory manager. Now, all of these RMI slips or these issues to production have to be recorded on the customer job card, the CJC, or the inventory job card, the IJC. And ultimately then, these issues would also be listed on the daily production report, of which a copy is sent to the raw material staff, and they use the daily production report or the issues recorded on the daily production report to compare that to the raw material inventory master file records for the day. In terms of movement of components through the production process as work in process, all time spent on each stage of the production, either by production employees or in terms of machine time or machine hours, should be captured on the relevant job card. So either the customer job card or the inventory job card. And this is done simply by writing the time on the card. So the time spent is then just written on the card by the employee or by using a clock in and out system. At the end of the day, the total time recorded on job cards are then reconciled to the total hours worked by the production staff. Okay, so this is done on a daily, that reconciliation is done on a daily basis. Any differences between the total hours spent by production staff and the total time recorded on the job cards have to be investigated and accounted for. Typically, you'd have a shift foreman or a production manager who has the responsibility of doing that reconciliation and investigating any differences found on that reconciliation. In terms of the transfer of manufactured goods to finished goods inventory, once the production process is complete, a quality control inspection should be performed, and the purpose of this quality inspection is to detect any defects that could be found in your finished goods before those goods are transferred to your finished goods store. Raw materials, labor, machine hours work, as well as overhead allocations on the job card should be inspected by the production manager to ensure that all the production charges have been correctly recorded. Okay, so these should then be compared to the details that are reflected on the completed production report. And if there are any variances from your standard costs or any unexpected items such as labor overruns or anything unexpected happen that causes any variance from your standard costs, then these have to be authorized by the production manager before the goods are physically transferred and accepted by the finished goods inventory stores staff. A factory or production manager should authorize by signature the transfer of the manufactured goods then into finished goods or finished inventory. And then what happens is the finished goods inventory store staff accept these goods, and they do that by acknowledging or signing the completed production report. We now move on to the inventory management phase of your production and inventory cycle. Now, within inventory management, the relevant ledger accounts have to be updated as the cost of work in progress and completed manufactured goods are recorded in the manufacturing process. This process or this function is usually done within the accounting department, and it includes the recording of, first of all, direct material costs of the raw materials and any consumables to work in progress, any direct payroll cost based on the number of hours worked on a relevant job, any overhead allocation for each job or production run. And this can be in terms of labor hours or in terms of machine hours. Okay, depending on the nature of the production process, the allocation of overheads can be either man hours or machine hours. And then lastly there, the transfer of the final cost of your finished goods manufactured to your finished goods inventory. Remember that when you are making use of a standard costing system, inventory should be recorded at the standard cost, and the various standard costing variances also then have to be recorded in the accounting records and monitored by management. As you can see here, the different transactions relating to inventory management has got its debits and its credits. Now, I'm not going to go through each transaction separately, but just have a look at the different transactions, and in terms of accounting for it in your accounting records, which accounts would be debited and which accounts would be credited. All production entries have to be supported by the relevant supporting documents. So we've spoken about the raw materials issue note, which is the RMI. We've spoken about the customer job card, which is the CJC, as well as the inventory job card, which is the IJC. We've also spoken about the use of a daily production report. Now, when goods are transferred from one department to the next, ultimately it has to be transferred to the finished goods inventory. And when this happens, acknowledgement of this final transfer is done by means of a goods transfer note, or a GTN. Okay? In terms of your general ledger, the amounts that are recorded in your general ledger have to reconcile back to either a daily production report when your goods are still in progress, or a completed production report in the case of manufactured goods transferred to your finished goods inventory. Now keep in mind that management has to regularly review these different production reports, and where they see anything is out of line or anything is beyond or not with what they expected, they have to inquire about it. Also keep in mind that when standard costing is used, that any variances from your standard costs have to be reviewed regularly. Moving on to the storage and dispatch of manufactured inventory, it's important to note that all items of inventory, whether it is raw materials or finished goods, all of these items that are purchased have to be accounted for upon receipt. Now, it's also important to remember that the purchases and payable cycle also comes into play, because you are purchasing certain items. Now, when the raw materials leave the store, this has to be accounted for as well, and this is done by a charge to production. Similarly, the cost of manufactured goods being transferred from work in progress to finished goods must also be appropriately accounted for. Once the goods are sold and dispatched to customers, the cost of your manufactured inventory or merchandise should be transferred to your cost of sales balance. And then when the sale takes place, the relevant customer is invoiced. Now, before the goods are sold, they have to be stored somewhere. And it's important that you have good controls in place to ensure the physical safekeeping of your inventory on hand. Now, these controls could include locked store areas, or your access to these areas could be restricted to authorized individuals only. There could be the presence of security guards looking after your stores, or even surveillance cameras. So students, I'm going to cut off here now and record a part 3 of lecture 1, which will resume shortly.